I think it's been just a glory trade. Traders must be rejoicing over the last, week and a half to 2 weeks. It's just been one-way traffic. Absolutely knocking the ball out of the park. As far as further downside, I wouldn't be surprised to take a couple of bucks off where it is. There's a Sunday meeting in Abu Dhabi. I'll be in there on Tuesday. I'm flying over. But this Sunday meeting will be very, very interesting, what OPEC and non-OPEC members come up with as far as Russia and how they talk forward. I think it's going to be a very fascinating couple of weeks ahead. And moving off the back of the midterms, it's been an incredible week when you're looking at US dollar, you're looking at the Fed, and you're looking now at what the crude market's doing. It's been very, very strong volatility.
Peter, I think one factor that's played out for crude is the fact that the Trump administration has allowed waivers to 8 countries, allowing them to import Iranian crude over the next 180 days. The U.S. has restored sanctions on Iran's energy, banking and shipping industries on Monday. So those are 2 industries that are impacted, but crude itself isn't seeming to impact it. How much reduction in supply are you expecting on back of some of those sanctions and some of those waivers that have been announced last week, or this week rather?
Well, look, I think it's going to possibly take a couple of weeks at least to get some idea as far as what impact it's going to have to markets, Samina. We look on board, you look at those 8 countries, well, the 8 jurisdictions, Taiwan included, of course, and how that all plays. I don't think you get an instant result out of it. You know that there's so many different moving parts. You've got the relationship, very, very strong strategic ties, Iran and Russia, of course, and then you've got that underpins as far as Saudis and Russia, both producing at near record numbers. So, let's just see what happens. No doubt favours very, very well for the Trump administration as far as what the president came out with about a month ago and said crude prices are too high, and the market's down 21%. So if anyone thinks that President Trump doesn't have an impact to global markets, that's a very good demonstration to see, when a president talks, the world listens.
Right. Peter, overall, with the kind of 21% slump that we've seen already, now there are concerns that OPEC is clearly growing with regards to where downturn goes. Saudi Arabia and Russia are actually exploring the possibility of a production cut for 2019 as well. Do you think a production cut would be a dramatic turnaround for the OPEC as well?
Well, I think so. That's definitely, a major concern. But I think what goes on in Abu Dhabi on Sunday, it'll be fascinating how that plays out because that's the start of the week, Sunday, of course. And we'll be able to observe as far as press releases, as far as the general body of the conversation. And then you've got the major OPEC meeting on the 6th of December. So I think it's going to be very interesting over that 3-week period where the market moves, whether it bounces from these lows, whether it continues its downdraft, or you just see some very large whipsawing, up 3 or 4% on trading sessions and down. But don't underestimate the value of the dollar either, because that's sitting at 96.5 to the US dollar index, and they're getting paid in US dollars, a lot of these producers, so they must be relatively happy as well.
Peter, from the latest data that we have, it's an indication that the U.S. has become the world's largest crude oil producer. Are you expecting this trend to continue? And more importantly, I think the market is a little confused fundamentally. Are we currently oversupplied or are we undersupplied? Because, of course, we've also seen China's import numbers that are indicating a slowdown. U.S. inventories are on a rise. And, of course, on the supply side, U.S. is turning out to be one of its biggest producers of crude right now.
Well, you've got to take your mind, back to a couple of years ago, Samina, and look at how much increase as far as production the shale revolution has produced. And now to be number one in the world, it's quite unbelievable. I mean, it's very hard to get your mind around that over that short period of time they've been able to ratchet up so quickly. So they're going to meet any, as far as shortfalls. I know the gasoline prices are far more affordable in the US, and you've got that general feel that if there are shortfalls as far as the world, then they'll be met. If you're looking at production and you're looking at consumption patterns coming out of China, look, at this time of year it's not unusual. You've got the inventories, you've got drawdowns as far as general market, and then you've got refineries and maintenance and so on leading into that, the Christmas period when you've got traditionally higher heating oil consumption. So I think, again, I'm feeling as though the next couple of weeks will be a very interesting lens how we move forward towards that Christmas period.
Right. So, Peter, with all of this said and done now, what do you think is going to come out with the meeting that is scheduled on Sunday?
I think it's going to be a little bit of a wait and see because, well, that's obviously going to have a large reaction to any market that's been, fallen as quickly as it has in that month. Is this the floor? We're understanding as far as, the hedge funds and so on, they've been driving it down for the last couple of weeks as well, and those big market positions. So as more bear traders come into the market, they're really just, they're seeing where the floor is. And the producers are maybe looking at themselves and saying, well, we wanted to see a little bit of a correction and maybe 5 or 10%, but we've overshot that by a further 11 or 12% to the downside. It's a very huge move. I mean, these are unusual moves. To have that in a month, that must be causing concerns of those, those talks coming in out of Abu Dhabi on Sunday. I'm sure that it's going to have it's going to be the first port of call to any, what's happening, where are we going, and what can we do to possibly arrest this fall.
Peter, what did you make of the Federal Reserve's meeting yesterday? Rates were left unchanged as expected, but Fed has very obviously indicated slowing in business investment. On the other hand, they've said the unemployment rate has declined. A rate hike is on the cards in the month of December. So what did you make of it? Largely in line with on script with what we were expecting from the Federal Reserve, so no ugly or good surprises from the Fed chief?
Well, I think so. I think their focus would have been very much, midterms. That's what's captured all of everyone's imagination this week. What the outcomes were there, I don't think any Fed chairman would, want to cause more volatility to an already incredibly volatile October by raising rates, a day or two after a midterm announcement or midterm, the results. So in turn, that December situation, you've got to understand also, and we all realise, the unemployment numbers there are just absolutely mind-boggling, what they've been able to achieve over the last couple of years. Have a look at the strength of the Dow, have a look at the strength of the dollar, and possibly it's at a point in time, just to take a little bit of a deep breath. They're working on a month-by-month proposition. Yes, there probably will be a rate rise in December, but it's still a work in progress. There might be many analysts are saying it's, 85%, chance of it happening. But there's still that little bit of, the outsider there to say there's no, definite that it's going to be, cast in stone.
Right. Peter, overall on the back of the FOMC rate statement as well, you have seen the, US dollar index advance to levels of almost 96.5. Where from here on? And secondly, what's the kind of impact that we would see with regards to where the domestic currency goes?
Well, I think it's probably got, if you're going to raise rates, and we're going to raise a rate rise in December, then I'm sure it's going to be bullish for the dollar. I think you'll be probably running a 97.5. You may even turn a 98 handle on that US dollar index. Still off its highs that you achieved 2 years ago when the Trump inauguration was, and that lead up to the elections there. I think it was about 102.5, 103. So it's been very volatile there over that last 2 years, all the way to 89, back to 96, and there's probably further upside. There's the first side. As far as, currencies, if you've got it strengthening, I'm sure it's going to cause more concern to those other economies. But naturally, the US dollar goes up and you're going to see a weakness across many other markets. And that will just be, leading into Christmas, I would say.
Right, Peter, with midterm elections now behind us, the focus will move back to the US-China trade war. Do you feel the last week's pullback in financial markets is nearing an end? Or do you think that US equity markets may continue to rally because history has shown that every time there's a political gridlock in Washington, there's a very sharp rally for financial markets. So what's your take on whether or not the pullback will continue? And secondly, at current prices on crude, are you a buyer? If yes, what's your year-end target on oil?
I'll answer number two first. No, I'm not a buyer of crude at the moment. I think there's further downside at the moment over the next maybe a week. I think it's going to be volatile. As far as a year-end number, I think you're going to have to look at, that WTI will probably edge up higher from here. It's currently 60.50 approximately. I think it'll probably have a 62, 63 handle on it. Put another $7 or $8 onto Brent or $9. You're probably looking at 71, 72 for Brent. As far as the trade war, that hasn't been put to bed. And I think President Trump's had his hands full over the last week or two as far as those midterms. Now he gets back to business. He's got the likes of the Larry Kudlows and Wilbur Ross and all of those guys that'll assist him in, what's the next pathway as far as those trade talks. And I don't think he's going to back off. I think, it's going to be a one-way street as far as President Trump's concerned. He needs to get some big results now and get back on the front foot. And he's not one to, he's certainly not one to take any form of defence. He's an attacker all the way through. And I think that the gloves are off now as far as China and trade talks. He's going to be very aggressive in the short to medium term, I'd say.